Let's take a look at 5 simpler rules for copy trading. There are so many traders, popular investors on eToro you can copy. But before you start to copy someone, you should follow 5 simple rules I will talk about now. Let's open someone. Rule number 1, trading history. Let's check trading history of this popular investor. As you can see, this trader has been trading on eToro since 2016. So there is some trading history. Most of his trades or her trades were profitable, which is good. But sometimes you can find a copy trader who started just recently, like in July 2020, and he has 40 or 50% profit for last 6 months, and you say, oh nice, I will copy this trader. But you shouldn't do that, because there is no trading history, and the trader could be just lucky. For example, if someone is starting in June or May 2020, when markets were down due to COVID-19 pandemic, it was not so hard to achieve good trading results for these last 6 months. But you cannot know how the trader will continue next months or years, and your money could be in risk. So before you start to copy someone, I recommend you to check his or her trading history and choose someone who has at least 2 or 3 years of trading history on eToro. Rule number 2 is risk score. eToro has own risk score scale from 1 to 10. 1 is lowest risk, 10 is the highest risk. So I recommend you to check traders' risk score, and preferably choose someone who has green bars, average risk 3 or 4. I wouldn't go for someone who has high risk score. Next rule is maximum drawdown. Maximum drawdown is indicator of risk, again like risk score, and you can see daily drawdown, maximum weekly, and maximum yearly drawdown. So I would go for someone with low yearly drawdown, because you can find many traders who achieve double or triple digit profits, but when you check their yearly drawdown, you can see numbers like minus 60% or minus 70%, which is very high, and you have to decide if you are willing to take a risk like that. Yes, you can easily say, I can handle that, but when the time comes and you can see that you started with $10,000 and suddenly your portfolio is down and its value is just $2,000 or $3,000, it's hard to bear for some people. So decide before you start to copy someone if you are willing to take that risk. Let's get to number 4. Rule number 4 is average profit, or risk versus reward. Check this statistic. This trader has average profit 19% and average loss is 17.71%, which is good because average profit is higher than average loss. So in long term you can be sure that you are not losing money. Again, some traders can have a high profitable ratio, but their average profit is small compared to average loss. So there is also some kind of risk that they are taking high risk to achieve just small profits. And last rule is diversification. Before you start to copy someone, check what instruments the trader is trading. For example, this one has 97% trades goes to stock market and just 1% ETFs, 1% cryptos, and almost zero commodities and indices. If you are going to copy more traders than one, I would suggest to diversify your copy portfolio. Choose one trader for stock markets, another trader for cryptocurrencies, another one for commodities, another one for forex market. So your risk is diversified, because if you choose 5 traders who mainly trade stocks, what happens when market go down? Your portfolio can go down with the market, and you will have a high drawdown or bigger drawdown than you would have if you will diversify your portfolio. So these were 5 simple rules. If you follow these rules, you will create a profitable copy portfolio. Thank you for watching. I will be glad if you check my profile, Freedom Fund, and if you follow me, if you add me to your watch list, and if you start to copy me. I've been trading on eToro for 7 years. All years except one were profitable, so I think your money are safe with me. Thank you for watching again, and please subscribe to my YouTube channel so you can watch my next videos.